Good morning, welcome back to Coffee and Cash with Simmons Capital Group. So today we're not in our little studio, but instead we're sitting in my office. And we're going to try something a little bit different. The first week of every month, we're going to do a little market update. The idea here is that it's not a traditional market update where we kind of go through this is what the bond market did, this is what the S&P did. Those are all things that you very likely know and kind of track. But at the end of the day, we kind of are going through some of the most interesting headlines and stories that we've kind of combed through and come across in the past month. We spend a lot of time watching the markets, reading research reports, speaking to a lot of clients. And so ultimately, I think that there's a lot that we can bring to you in terms of just some interesting headlines, interesting stories. Some of these are not cohesive, right? They don't all fit together, but it's more just kind of like a bit of a high-level overview of some of the most exciting developments that happened in the markets over the last month, and also some of the more interesting stories. So I hope that you enjoy the new format. Feel free to subscribe, click like, and leave us some comments if you have any suggestions for how we might be able to improve this moving forward. So let me jump straight in. One of the interesting headlines that I came across this month was in the Financial Times. It was a really interesting article about Apple and some of the changes to their privacy policies that they recently made. This was the headline. It said, Apple privacy policy change on ads cost rivals $9.9 billion, almost $10 billion. That's a way to stick it to your rivals. It reads like this. It said, Apple's decision to change the privacy settings on iPhones caused an estimated $9.9 billion of revenues to evaporate in the second half of this year at Snap, Facebook, Twitter, and YouTube, as their advertising businesses were shaken by the new rules. Apple introduced its app tracking transparency policy in April, which forced apps to ask for permissions before they tracked the behavior of users to serve them personalized ads. That's a major change in the way that traditional digital ad tracking has been done. Most users have opted out, leaving advertisers in the dark about how to target them. Advertisers have responded by cutting back their spending at Snap, Facebook, Twitter, and YouTube, and diverted their budgets elsewhere, in particular to Android phone users and to Apple's own growing ad business. I found this really fascinating because it just shows how interconnected all of these major tech companies are, right? One decision by Apple cost its competitors $10 billion, right? A simple policy change. And so it's just pretty fascinating to me, especially in this day and age of really heightened awareness about consumer data and privacy and things like that, that ultimately there are very real, tangible financial impacts on these companies in terms of the changes that consumers are demanding in terms of how their data is managed and how their data is handled. I'm interested to see how other companies like Facebook, Snap, YouTube, etc. Kind of pivot, because we all know that they're going to figure out a way to still get their ads in front of consumer eyeballs. So I thought that was pretty interesting. In other news, Tesla, the electric vehicle maker, recently hit a really huge milestone of becoming a $1 trillion market cap company. Market cap is a measure of how large a company is. Basically, you determine a market cap by taking the share price times by the number of shares available in the market. So as the share price rises, the value in the market cap of the company increases. Tesla recently blew through the $1 trillion company value mark after Hertz announced that they were going to be purchasing a huge number of Teslas for their rental fleet to be renting out to customers. What I found really interesting is this stat here, that Tesla builds about 500,000 cars per year. Worldwide, there's around 90 million, right? So it's a drop in the bucket, but yet the value of Tesla as a company is worth more than the next 9 automakers combined. So Tesla on its own is worth more than the next 9 automakers combined, even though it only makes a small handful of the number of cars produced each year. I thought that was just fascinating. It's obviously, a very clear indication that the market is very excited about the prospects of electric vehicles, clean energy, kind of the way that things are moving in that space. So I just thought that was really kind of fascinating. I guess we'll talk about Bitcoin, right? We don't spend a huge amount of time talking about Bitcoin. We do have a couple of very simple basic primer videos that you're more than welcome to go and watch. We'll include the links in the description below. But ultimately, in October, it was announced and it was first started trading. There's now a publicly traded Bitcoin ETF. An ETF is really an investment vehicle that allows investors to invest in different types of investments, like stocks. So you get a stock ETF, bond ETF, and now we have a Bitcoin ETF. What's kind of interesting to know about this is that it does not actually invest in Bitcoin itself, but instead it invests in what are called Bitcoin futures. So it gets access to the price movements of Bitcoin as an asset and pretty closely tracks it, but it's not necessarily a perfect tracking mechanism because at the end of the day, it does not hold physical Bitcoin itself. So just as an FYI, important to know if you're considering investing in a Bitcoin ETF. Lastly, some pretty big news over the last couple of days. Right at the end of October, early November, the Fed recently just announced an official timeline of tapering. I'm going to do a video on this in the next week or two. Tapering is really, there's a bunch of different programs that are ongoing now since the pandemic that the Fed implemented to try support the financial markets. It's already starting in February and March of last year. Tapering refers to the reduction of bond purchases. So one of the many different things that the Fed has been doing to support financial markets over the last 12 to 18 months has been that they've been buying about $120 billion worth of bonds every single month. That's a significant amount. They just recently announced that they're going to start to taper, which means reduce the purchases by about 15 billion. So still going to be buying a lot, but it is the first test of how the market reacts to a slight withdrawal of support from the Fed versus all of the accommodation and support that the market has received. So we're watching it, as a very interesting indicator in terms of how the stock market tends to react and how the economy tends to look in the numbers moving forward as this tapering begins. So there you have it. 4 pretty wide-ranging headlines, but things that I found interesting and things that I've been speaking with clients about. I hope that was interesting. Feel free, again, to leave us comments, send us some feedback through our website or through responding to the email, and give us your feedback. Well, what are the things that you would want to hear about in these monthly updates? Thanks so much for watching. I hope you have a great day, and I'll be speaking to you soon.